This is the Investor Connect podcast program. This is Hall T. Martin. I'm the host of the show, in which we interview angel investors, venture capital, private equity, family offices, and many other investor groups for startups and growth companies. I hope you enjoyed this episode. Thank you for joining us. Well, hello, this is Hall Martin with Investor Connect. Today I'm here with Michael Cardamone, CEO and founding partner of Forum Ventures. Forum Ventures is a B2B focused seed fund, studio, and accelerator based in New York City. Michael, thank you for joining us.
Yeah, thanks for having me. I appreciate it.
So where are you calling from today? Are you in New York or somewhere else?
I'm not. I live in Connecticut, living the whole minivan, 4 kids life in the suburbs. But we have an office in New York. We're headquartered there, and I head into the city a couple of days a week. But I'm calling in from Connecticut today.
Great. Well, tell us more about your background. What did you do before Forum VC?
So I spent 9 years in San Francisco. So I moved out there in 2008 and was pretty fortunate. I ended up at Box when it was about 25 people. It was a small startup. They were kind of transitioning from consumer to B2B, and I was their first BD hire to help them kind of work on partnerships to get distribution on the B2B side. So spent some time there, went to another startup in the ed tech space that we grew to like 24 million revenue. So most of my operating experience was on the go-to-market side, and then was doing a little bit of angel investing, consulting, and ended up launching what is now Forum. It was originally called Acceleprise in 2014 as the B2B SaaS focused accelerator. And I can talk more about the evolution of that, but we rebranded to Forum Ventures a couple of years ago, and we've grown quite a bit since then. But that was kind of a bit of my background in tech before starting it.
All right. Yeah. Well, tell us more about Forum Ventures. We're seeing a lot more studio models coming out and want to dive into that later, but tell us more about it in general. What do you guys focus on and what kind of traction are you seeing these days?
So like I said, we initially started as a B2B SaaS focused accelerator with the premise that there were all these, generalist accelerators like YC and Techstars and 500. But at the time in 2014, there were maybe 2 or 3 other B2B focused accelerators in the country. And I built a good network of people who were part of that first wave of SaaS companies being early at Box. So people who were like early at Salesforce, Marketo, CEO of Gainsight, CEO of Zamora, and was able to get a critical mass of them together around this idea that we could have really small cohort sizes and be very hands-on around go-to-market, especially, and therefore then drive a lot of value for the founders we work with and investors who invest in the fund. So was able to pull together a tiny fund in 2014 to kind of prove the concept. Fast forward now 9 years, we're about to launch our 5th accelerator fund. We've worked with about a little over 400 companies now through the accelerator that have gone to raise a lot of money from hundreds of funds like Bessemer and Kleiner and Andreessen. A lot of the big brand name funds have invested in our companies. And what we realized along the way is a few things. One is, we were in the weeds with these founders, almost an extension of their founding team. And then we weren't able to really participate in the next round. Like you're running small follow-on checks out of the accelerating fund. We wanted to be able to more meaningfully participate in at least a subset of the companies going through the accelerator. So 3 years ago, raised our first seed fund. We're now investing out of our second seed fund. It does a mix of follow-on investments in companies coming through our own accelerator, plus flexibility to invest in pre-seed and seed deals outside the accelerator. And then about a year ago, we decided that we had built this huge network. It's snowballing, just given the volume of companies we're investing in. We have a ton of corporates we have relationships with. We have a lot of founders and former founders and angel investors and operators in our network. And we felt like we've built this like really good engine and infrastructure to help companies go from 0 to 1. And we thought we could really execute on the kind of -1 to 0 of a studio where we could start companies from scratch, bring CEOs in, and then put them into the infrastructure we've built out to help companies from 0 to 1 through the accelerator. And we felt like we were kind of uniquely set up to execute well on a studio. So went to our existing LPs and raised this separate studio fund to kind of launch that more formally. So we now have 9 people full-time on the studio. We can talk more about that, but we have three parts to our business now: the studio, the accelerator, and the seed fund.
Great. Well, tell us more about raising pre-seed capital in today's market. What's that like?
It's hard. I've been doing this for 9 years now, and this is probably the hardest it's been for founders to raise money. Yeah, I think there's still always going to be a subset of founders who have, check all the boxes of the type of thing like traditional VCs are looking for, where they were, a repeat founder with an exit, or, early employee at some high growth venture-backed company that everyone knows about. And those sort of founders are able to raise relatively easily still in this market, which is like more confounding for the founders who don't check those boxes because they see those sort of rounds happening and they wonder why it's so hard for them. But for the vast majority of first-time founders who don't check all those boxes of like early senior employee at a high growth company, it's really hard to raise right now. And I think, you just have to like be able to prove a lot of different things around your business more so than you used to. And I think the bar to then raise a seed and the bar to raise a Series A are just getting higher and higher, which, it creates challenges for founders.
So, but what do the founders need to prove or show at the pre-seed stage to get into your program? What's your core criteria just to join?
Yeah. So out of the accelerator, we're willing to take a lot earlier risk than most traditional pre-seed funds. But, what we were looking for really is like a founder who has really good founder market fits. Like, why are they building the company they're building? What unique insights do they have? What unique experiences they have or connections they have that make them the right person to be building the thing they're building? And then what are early proof points that there's demand in the market or pull in the market for what they're building? And that doesn't mean you have to have traction. Like, traction is obviously the best way to prove that. But even at the pre-seed stage and like really early stages, like how much customer validation did you do? Do you have a wait list of people? Do you have, we don't put a ton of weight in LOIs, but like at least it's a good indication of you're getting people to express some amount of interest. We try to get feedback through our network, but you need to prove out people want what you're building and are willing to pay for it. You're the right founder to build this. And then, we need to feel comfortable that the founder can execute well, which is a mix of like have they been able to show that in the past that they've executed well, previous roles, like have they been promoted, will people vouch for them if we back channel about the founder? And then lastly is like, is this an interesting and big enough market to be kind of venture scale or to feel like, if everything goes right and they get traction and they prove out customers want this, will downstream investors be interested because they think it's a big enough market opportunity or the market's growing fast enough? So we try to look at like market dynamics, founder market fit, and then what early signs can you show that there's pull from the market?
Well, then for the seed stage, what do you look for? What's different and where does the weighting go in the factors of choosing a deal or not?
Yeah. So I think when you look at like seed deals that are happening right now, and I'll define pre-seed as like, there's accelerator, then there's like pre-seed rounds, which I would say we define as kind of like 750 to $1.5 million or 2 million on the big side. And then I would say seed rounds are more traditional rounds where it's like $1.5 million to $3 million seed round, usually with like an institutional lead. Those sort of rounds in today's market, for the most part, if you're a first-time founder who don't check all those boxes, which is like a small subset of founders that do that. But for most founders, a lot of times you need 200, 300, 400K in ARR, like real traction on the SaaS side. And I hate to put an exact revenue number on it because it's never an exact revenue number. And that can feel like you're moving the bar a lot for founders because they'll get there and wonder why it's still hard to raise. But it's like real traction with real customers, a pipeline that's growing, much more material kind of data points to show traction in the market. And then all the other things I talked about of like founder market fit. Do they think you can build a great team around them? So at that point, like, have you been able to recruit 1 or 2 people around you that is better impressive? Have you been able to pull like good people from the industry in or angel investors? Like, what sort of proof points have you proven that you can speak about the company in a way that gets people really excited about it and therefore want to get involved in what you're building? And then again, like, the right narrative around how your market's evolving, how you win in that market, and why that market opportunity is going to be enormous over time. I think you need to like really nail that. So a lot of it is like being really good at communicating, because how you communicate with, whether you can communicate with like clarity and conviction will determine and dictate your ability to fundraise, will help your ability to recruit great people. So when investors say they're looking for great founders, like those are the sort of traits they're often looking for, because it just helps you build all the things you need. And then real traction points. Like I said, I think most of the seed rounds we're seeing, and we think we have a lot of data points to see across our portfolio, is usually companies are in that like I'd say 2 to 500K in ARR is like when these like, $2-3 million seed rounds are starting to happen in this market.
So what are the differences between you and, say, other venture funds?
Yeah, so we're quite different. I think one big way is if most small early stage seed funds, the way the funds are structured with like fees being 2 and 20, 2% a year, usually they have small teams, right? They have like 3, 4, 5 people on the team, and they have to be really focused. And a lot of them are investors, and so they don't have like a big platform function usually until they get much bigger and they're multi-stage with a lot of AUM. Because we have the accelerator, our model is very different, and so our operating budget is a lot larger than most early stage funds. So from a seed fund perspective, how we differentiate is like we have a team of 28 people full time, and everyone at work, has kind of carry across a lot of the fund, or most people have carry across all the funds. And so everyone has an incentive to support whether we invest in the seed fund or the accelerator or the studio. And so we just have like much more resources and infrastructure and people and a whole platform function to help support our companies post investment than most early stage seed funds would have, unless you're like a big multi-stage fund. So that's one big differentiator. The other is, we have all these different like we can invest in the seed fund, but we also have the accelerator. And that's what we started as. So our DNA is to be like very hands-on, very supportive, in the weeds with the founders. And we can now support founders wherever they are in the journey. So if you're like super early, just a product and like maybe an early version of the product and some, maybe some customers, like we can work with you through the accelerator to help you figure out like how to get to that next round. If you're already raising a pre-seed or seed round, we can look at it on the seed fund. So we have a lot more flexibility of like what stage we get involved in at these very early stages, and then how helpful we can be depending on what you need for the company.
Well, you have both the studio model and accelerator in the same program. In what cases the studio model work best for a startup, and in what cases the accelerator work best? How do you divide up the two?
Yeah, some studios will take an approach that is like founder led. We take a different approach of we are idea led. So the accelerator is for founders and companies that they already have an idea. They have an early version of a product. They're like going to market and they just want support on helping with accelerating growth and fundraising and just like the camaraderie of being part of a cohort. The studio, we're often coming up with ideas either internally with corporates in our network, with industry experts. If we're like looking at ideas in a specific industry, we'll come up with a ton of ideas. We'll then spend a bunch of time, our team on the studio side will spend a bunch of time narrowing that down through validation, talking to customers, like figuring out like where do we actually have a product and a pain point that people are willing to buy and there's interest in the market. And so we'll then flesh it out and narrow it down to a subset of pretty highly vetted ideas. And once we think are venture scale, that we think are fundable if we had a great founder in there, and then we have recruiters on the team who go out and find CEOs to come into those ideas. We then work with those CEOs to like iterate and like fully flesh out the idea. And then we make a final like go or no go decision on it. And so the CEO comes in as a co-founder with us, but they're often coming in where we've already got a pretty good semblance of like what the idea is, what the pain points are. We've gotten a lot of validation from customers, and then they help us just fine tune it. And then we decide mutually if it makes sense to launch it together, essentially as co-founders of the company. So it's a much different model than like a company that's already formed and has an idea and has an early version of a product with founders attached to it, which would be the accelerator.
Cool. So what advice do you give to someone raising venture funding? What do you tell them to do before they take that check?
Yeah, a few things. So one is, do you want to build a quote unquote venture scale business? And is that what your goals are? And understanding what that means and what comes along with that. So that's one piece. Two would then be like, if you decide you want to fundraise, treat the fundraising process like a sales process, like build out a list of funds that you think are a good fit and why they're a good fit, run a really tight process, try to set up a lot of meetings over a 2 to 3 week period so that you create urgency in the process. As you're getting feedback, like think through what questions are you getting that you don't feel like you had great answers for, and write out better answers for them, get feedback from people in your network, like really run it like you're running a sales process and be highly efficient because in a market like this, especially, every investor, if they have the opportunity, will sit and wait because they get more information, more data points. Like they need a reason to have urgency to move. And that's either they think they're going to miss out on it if they don't move quickly, or you're creating enough momentum that they're just like, okay, let me move here to go faster. So creating that process will help create that momentum and help create urgency in the process. So that's one piece of advice on if you do decide you're going to go fundraise, treat it like a process and like really run a tight process. Be organized around it.
So I always ask this question: what online information source do you find most helpful in your work? I'm always looking to discover new sources out there myself.
Yeah, I mean, I listen to a lot of podcasts, but a lot of them are the big, like there's the Origin podcast for LP stuff, but there's like 20-minute VC and Full Ratchet and those sort of stuff. I find Twitter to be helpful. I follow a lot of other VCs and founders and kind of, really good like executives. And I find that you end up finding a lot of good information through that are one-off like links to something. But I think if you do a good job curating who you follow, like you can get a lot of good information out of Twitter as well, or I guess X now. But yeah, those are some of the resources.
Good. And so you see a lot of new technologies and new business models every day. If you could start a business tomorrow, what would that business be based on what you've learned?
Well, we do start businesses out of our studio. So I think one of the things we're pretty focused on out of the studio right now is just a lot of ideas and companies building infrastructure to enable a lot of this AI that's happening. So there's a lot of kind of the application layer building, sales co-pilots and recruiter co-pilots and a lot of things kind of built on top of these models. But we think there's a lot of opportunity to enable a lot of these, like either building your own LLMs or stitching together multiple LLMs or compliance and security, like a lot of stuff on the infrastructure layer that will enable this next wave of AI. And so we're thinking a lot about those sort of ideas and launching companies in around there out of our studio. And then we're always looking at various different vertical SaaS companies. Like I think the next wave of vertical SaaS companies are going to be kind of AI first. And so I think there's a lot of opportunity there as well. But yeah, those are some of the areas we're looking at out of our studio when we're looking to start companies.
Great. Well, in the last few minutes that we have here, what else should we cover that we haven't?
I think one is just in a market like this, especially, but at any point, being a founder is really hard and it can be lonely and is like a grind. You're going to get a lot of no's and all the things that you hear get exacerbated in a bad market. And it makes it even harder to do. And so for founders who are venturing out and starting a company and taking that leap of faith and that risk, surrounding yourself with peers, with other founders, whether it's through an accelerator or just through your network, I think is an amazing way to, like, from a mental health standpoint and just from a camaraderie and competition and like for a lot of reasons, I think can be like really, really helpful for founders. And I don't feel like enough founders do that. And it doesn't have to be an accelerator. Obviously I'm biased in that we run an accelerator. So that's like an inherent way to do that. But even if it's not an accelerator, like find other founders who are going through the grind at a similar stage as you so that you can kind of, talk about what's working, what's not working, like how are you feeling, like just the human side of it as well can be super helpful because it is a long journey. It is the grind. It can be lonely, and like having that support around you, I think is incredibly helpful for founders.
Well, great. So how best for listeners to get back in touch with you?
I'm on Twitter at MG Cardamone, and I'm just Mike at forumvc.com. So pretty easy to find.
Great. We'll include that in the show notes. I want to thank you for joining us today and hope to have you back for a follow-up soon.
Yeah, I appreciate it. Thanks for having me.
Investor Connect helps investors interested in startup funding. In this podcast series, experienced investors share their experience and advice. You can learn more at investorconnect.org. Halty Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early-stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinion of Investor Connect. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions.